Hello, this is Ben from Elliott Wave. How's it going? Here's a new video on Altria Group, ticker symbol MO. As always, today we're going to take a look at the Elliott Wave count for Altria, and then we'll take a look at some dividend data, being this one of my holdings in my dividend growth portfolio. So I will try to continue the series that I've started last month. I'll try to make 2 videos per week, and we'll see if you guys enjoy it. So as you can see here, let's just dive into it. We're taking a look at a potential 1, 2, 3, 4, 5 into primary wave 1, topped in 1908, a sharp wave 2, and then another potential 5 waves up into wave 3. Now, everything we saw since 2017 could be part of a large degree correction pairing up to this wave 2. Now, what is in favor of this count is how this correction here, which is potentially currently taking place, does look sideways. I would try to challenge you to tell me this is not going sideways, while the corresponding wave 2 seemed to be a sharp correction. So because of the rule of alternation within the Elliott Wave theory, we could expect that these two are corrections of the same degree. That possibility is also provided by the magnitude of the correction itself. As you can see here, we've had a 68% move down into wave 2, and we peaked at 61, currently sit at 45. So these two are the largest corrections ever to take place in the history of Altria. Therefore, we could expect them to be of the same degree. Now, this wave 3 is not even 61.8% the length of wave 1. Nevertheless, we've had pretty long wave 1, so it would make sense for wave 3 to be slightly shorter, and then we could expect an even obviously shorter wave 5 in order not to break any Elliott Wave rule. Now, let's go and dive into the daily chart. I haven't labeled it yet because I want to show you what I see. So the main takeaway that I want to show you today, guys, is how this move down from the June 2017 high looks to be a corrective move, therefore not trend establishing. Now, obviously, if you know the Elliott Wave theory, 5 waves a trend make, 3 waves a trend don't make. So in order to have a trend establishing move, therefore expect further downside, that's what I'm saying basically, we need to see 5 waves. Now, you could argue you have 1, 2, 3, 4, 5. Now, what I do not like about this count, there's no rule violation. However, there is no alternation. Let me show you. So let's just label it 1, 2, 3, 4, 5. This would be a minor degree. As you can see here, there's no real violation. Wave 3 is not the shortest. Wave 4, there's no overlap with 1. And wave 2 obviously does not retrace past the point of wave 1. So none of the 3 main Elliott Wave rules are broken. Therefore, this is potentially valid. However, same thing as I stated for this wave 4, we do not have alternation. If you pay attention to it, this wave 2 looks sideways, just like this wave 4. And that goes against the rule of alternation stated by Ralph Nelson Elliott himself, meaning that most likely this is not a 5-wave move, but it could be a 3-wave move. What it could be is down, A, B, C, so extended wave C here. And here we would have alternation between wave 2 and 4, as you can see here. So that's a possibility. What I don't like about this count is how this wave B looks a bit smaller compared to these waves that should be based on this count of 1 less degree. However, this could be a 3-wave move, 3 down, 3 up, 5 down, which is what I would prefer counting it like. So let me just delete this and we'll just label it like 3, 3, 5, ABC. And I'll just show you the subwaves. So now, same thing on the upside. This does look like a 5-wave move, but we do have wave counting validation. Wave 4 here would overlap. Let me zoom in so you guys can see better. Would overlap with wave 1. Therefore, this also appears to be a 3-wave move, A, B, C. That means that either we're going to have 5 waves down to the downside into wave C. Let me show you. So either we're going to get, let's fix the degree, 5 waves down here into wave C, or else we could just keep moving sideways into what is called an Elliott Wave triangle to then complete wave 4. So that would basically be a sideways movement that would range within $31 and $57. So it would need to stay within those boundaries and then it break out whenever the triangle is completed. Obviously, that is also based on Elliott Wave theory rules. Or else what could happen, just could be a more complex correction. So something like this. Upside, downside, and then resume higher. Now that's the thing in corrections. You never know which one you're gonna get. You just can see one wave at a time. You could argue it's kind of pointless to try to anticipate it. The most important thing, especially if you're looking at a long-term scenario, is being aware that you are in a correction. That being said, basically we could expect further upside. This is base channel. You connect 1 and 3, projected to 2, you get your estimate for wave 4. So we're still within the channel. If you look at the averages, as you can see here, we're kind of, purple line is 200 EMA, so we are dancing basically up and down. The averages, nothing crazy, nothing too extreme, which confirms kind of the range and sideways movement we're seeing. So that was the Elliott Wave count. Let's move into some dividend data. So as you can see here, Altria is currently paying a forward dividend of 9.09% after its most recent dividend increase this past quarter by 4.25%. As you can see here, we've gone from 94 cents to 98 cents per quarter. So as I just said, a 4.25% increase, which if we look at the dividend growth rate, as you can see, we have a 10-year growth rate of 7.76%. So the most recent dividend hike was below the 10-year averages and fairly near the 5-year growth rate and above the 3-year growth rate. So overall, a pretty solid increase, confirming that Altria is indeed a dividend king, having more than 50 years of dividend growth. So if we look at dividend safety, we can see how the cash dividend payout ratio currently is at 78%, and the 1-year forward cash flow payout ratio stands at 82%. So quite a high ratio just compared to other companies, but we know that Altria's always been at pretty high payout ratio in the past. Now, what I wanted to also take a look at is how Altria currently is trading 5% down year to date. However, if you consider dividends, as it was trading at $45.52 back in January of this year, including a $3.92 dividend, you'll currently be in the green, which is not what happened for some competitors, as you can see here on the right, such as British American Tobacco. Now, as you can see here, this stock is currently at 25% down year to date. It does have also a pretty appalling 9.28% dividend yield. However, if we take a look at dividend growth, it is nothing like Altria. Currently, 1-year growth rate stands at 2.91% and the 10-year at 2.61%, compared to a bit over a 7% dividend growth rate 10-year for Altria, as we just showed. In addition to that, if we take a look at dividend safety and we take a look at a cash dividend payout ratio, it currently sits at just below 50%. So you do see how similar companies do tend to have higher payout ratio than normal. And despite the fact that this is much lower than what Altria is currently providing, we're seeing a lower dividend growth rate, which could correspond to investors as a warning sign, and therefore that's why the stock could be in the red. As investors, may have lost trust in the company. So that was it for me today. As always, take a look at my other videos on my dividend portfolio holdings such as Apple, ExxonMobil, Kellogg's, NextYear Energy, and many more. As always, don't forget to subscribe if you want to stay updated. Leave a like if you enjoyed the video, and I'll see you in the next one.